Hi, I'm Pattu from freefincal. The market has fallen 30% in about 18 days and it has continued to fall. Today it fell another 2%. Uh, there's all sort of messages and panic around going on. What the Prime Minister would say in less than an hour from now. Well, let's just wait and watch this. I don't think there's any need to panic. We just need to be careful. I don't think most Indians are practicing social distancing effectively. We need to be a little more careful because we have just at the start of this crisis in India. It would take another month to see how uh, quickly the infection spreads and so on. Let's find out. But in the meantime, we have all sort of questions. Should we exit from equity mutual funds now to prevent losses? Uh, I need money after 5 years. Should I wait for the market to recover? Is this a good time to start my SIP or wait until the market recovers? All sort of questions. Let's try and answer some of these. Now, I just hate messages like this too will pass, just hold on. I mean, you have to have a plan. It's just foolish to say this too will pass. I mean, if you say this too will pass to negative returns, you should say it to positive returns as well, right? So you have to have that balance. That is just not present. Just we have to be calm. So let's try and answer these questions. Should we exit from equity mutual funds now to prevent losses? But that depends on when you need money. If you've been told that you will get returns, invest for 2 3 years, then this is the time for you to pull out and make sure you prevent any further loss. If you need money in the next 5 years, say by 2025, exit now and prevent further loss. If you need money in 2027, pull out most of your equity out and leave only about 25 30% in equity, push it to safe debt, and make sure uh, you start investing a little more to compensate for this loss, and also whatever equity is remaining, try and decrease it continuously and gradually. These are the techniques that we talk about in our lectures on goal based investing. um, for 10 years, if you have a goal that for if you need money in 10 years, I would say reduce equity exposure to about 40% now, and then going forward reduce that 40% also continuously and gradually. Beyond 10%, you can manage to hold on to about 50 to 60% at least for some time. But let's just but those are again thumbs rules. We can't keep saying this is right, that's wrong, that this is better, that's better. Portfolio management is it's a gray area. There are no right and wrong in portfolio management. This is the reason why we talk about stepwise equity reduction in my robo advisory template. We talk about continuous equity reduction with proof on why that works no matter what the market situation in the lectures on portfolio management. You can see the link for that in the description box. If I pull out now and the market recovers, I will miss out on the gains. That's the problem. This attitude has to stop. We have to develop an ability to accept losses and move on. There will always be time lost if you keep waiting. It just you won't be able to recover your losses, and you lose your ability to generate a good enough corpus. Some people talk about V-shaped recovery after the fall because the fall was steep. The recovery also will be steep and so on. Look, even if the recovery is steep and there is a V-shaped recovery, after that there we I think it's safe to expect the recession for about 1 to 2 years. So it's going to be sideways market even after the recovery, if there is a recovery. I don't know. So your returns are going to suffer. So you have to have proper risk management in place, and you can't just wait and for it to recover, especially if you need money quickly. So don't make that mistake. If you need money within the next 5 years, 7 years, pull out for next 5 years, pull out all of it. Within the next 7 years, pull out most of it. Within the next 10 years, pull out at least some of it. Make sure you protect your investments. What if the market rebounds? Nobody knows. You can't just hope for markets to rebound when you invest in equity. Investing with just hope in equity is just foolish. Please don't do that. It's just not on. Is it a good time to start my SIP, or should I wait for the market to recover? You can continue your SIP no matter what. Risk management is different. Monthly investing is different. Don't confuse these two. Learn how to manage risk efficiently. I've talked about having a proper asset allocation, rebalancing it every year. Or if you have liquid cash now, you can rebalance now. It's fine. I've again talked about stepwise or gradual reduction in equity. I mean, I've said the same thing. I'm bored of saying it again. People who watch this video and say, "Oh, you're talking about problems." No, I have talked about solutions. All of it is done. It is your job to find out, search for those solutions in my channel. I'm not interested in saying it again and again and again. It's just too boring for me. My goal is long term. I'm worried about the daily market fall. Should I exit from all equity investments and re-enter at a better time? Look, if you exit now, it's most likely most people who exit now will be exiting in panic without any plan. If you exit with a plan, you also have a re-entry plan, then it's fine. But sometimes, as long as your basics are covered and you have, let's say, you have liquid cash to cover 2-3 years expenses, then you can just wait for the market to recover on its own. As long as it's a long-term goal, that would be simpler, safer, laziest way to approach it. But then you must have that 2-3 years cash, liquid cash ready with you in addition to your normal emergency expenses, just in case you lose your job or you have a business and you're not able to pay your salary to your staff and so on. Just for that, have 2-3 years of liquid cash. If you don't have 2-3 years of liquid cash, pull out money from equity. No matter what the loss, just keep that cash ready with you. Rest of the money, let it be in equity. That's the laziest, simplest way to handle it, provided it's a 10-year plus goal. If you exit now, you should know when to re-enter. It's a pain. They will always be worrying about, have I done it right? There'll be a lot of double, second guessing and so on. It's just not worth it. Shall I invest more in this market? Yes, you can, provided you have the cash equivalent as mentioned, about 2-3 years of liquid cash. You can rebalance your portfolio now, provided you keep that 2-3 years of liquid cash. Don't touch that. And people have asked me how much my portfolio has gone down in recent times. I have been sharing it in Asana Isabel, but I will do a detailed video and article on that. How am I handling the current crisis? I have talked about this several times. My son's debt portfolio for my son's future education just got an amount equal to the current UG cost, a little bit more. It's already safely stowed away in safe debt. Equity was 60%, it must have fallen down to 54%, something like that. I'm not doing anything about it. For the moment, for retirement, the equity corpus has gone down, but it is still about 30x my annual expenses, so I can still manage. I have some cash which I want to deploy into the retirement portfolio, but I'm not yet, I have not done it so far, but I will be doing it in the coming days. That's what I wanted to. That's my plan. Don't have anything other than that. I'm just busy looking at the market and making articles and so on. So that's what I wanted to say. If you have any questions, comments, please let me know. Let's see what our Prime Minister has to say. Bye bye.